Ready to go. Welcome, welcome, welcome. How are you doing, Lee? And how are you
Um,
guys doing?
I'm doing good. It could have been a little bit better this morning. I mean, yesterday evening, but yeah, but still here,
Really
still good.
happy. That's happy to hear, guys. And yes, welcome to all you guys joining in live. We appreciate each and every one of you guys. My name is Rudo. This is my trading partner, Lee. And we don't give any BS regarding news, crypto, and trading events. And the kind of narrative for today, we're going to be looking at why our stop limits always get hit. Those are frustrating things that we kind of deal with. Then we're going to take that information and apply it to a couple of strategies because remember, some of you guys are in it for long term, some of you guys are trading. And then what we're going to do is we're obviously going to do another live analysis of where we are within the market. Remember, we do this every day. So you can join in every day and come and see where we at and where's the market at and where is our thoughts at. So welcome to Crypto EMC, guys. I hope you really enjoy this channel with us. So Lee, I practiced this word philosophical about 20 times. And for those who were on the stream yesterday, that was my tongue twister of the day. So philosophical. So I've got it down pat, philosophical. And I don't want to get too philosophical today, guys, but the main thing that you need to always remember is that you need loss to breed success. That's the only way you can define it. And sometimes that can become a very hard ship, especially when we're trading and the way that we go about trading, because we indoctrinated from little, that you're either wrong or you're right. And when we started trading, and I mean, me, Lee, we and you bickered around this route. You said, where's the rules? Where's the wrong? Where's the right? And although Lee has rules and he trades like a machine and he is a lovely person to look at with that beautiful shirt of his. The main thing is that there's no wrong and right answer. It's all about whether you're making money, and the wrong and the right only applies to your actions. Did you do the right action? Did you stick to your strategy or not? So it's a bit of a mind shift because we are normally used to the fact that 1 + 1 equals a specific outcome. And with trading, 1 + 1 equals infinity, not 2. And being comfortable with that will help you a lot. This being said, somewhere we need to draw a line in the sand and we need to think about stop limits and how we're going to go about placing them, looking at them. And for some people, they are called stop losses. And I tend to try and avoid that word stop loss because I don't see it as a loss. I see it as a limit. I've limited my exposure to this position that I'm taking. And I want you guys to actually just do that as well, stop limit instead of stop loss, just get that positivity into your way of thinking, because these negative words, although they are small and insignificant, can breed a condition. Lee, how many people do you know that like a stop limit or stop loss? Let's use the word. Everybody hates it. What's your thoughts?
True, everybody hates it because you always get this impression. I don't know if you agree with me. You always, even if you have the main direction of the trend right, they always come, stop you out, and then they just go without you. And the trading happens quite a lot, especially if you are not experienced and how to deal with that. And you get like, what must I do? Must I chase another price? They just stop me out. And you can try even a second time and they will come back for the stop loss again and go without you. So yeah, it happened quite a lot. So at the end of the day, what is the end result of that? Then you said, I'm giving up putting stop losses because it happened all the time. I'm out, they go without me, and then you just give up your stop loss or stop limit, like you said. And or sometimes when you are watching this price action live, even though you have put your stop loss or stop limit, stop limit at a certain level, and when you see the price coming to hit your stop limit, then you tend to cancel it, delete it, or move it down. And this is also something that it's a bad habit to have, because when you plan your trade already, and when you're coming, you know that you feel like you're gonna get stopped out. So you have this hope that the price is gonna go back and then just went up again, and that will already changing your pre-planned trade. So I don't know, have you done that maybe in the past, Rodo? Changing your stop limits?
Happened.
Yeah.
Yes,
and then
what
at the end of the worst is like you know what, I'm not even gonna put a stop loss.
That's when you give up.
I'm just gonna and then this is when you're gonna get hurt. Just one time. They only need one time to hurt you on that, and all the profit that you have made in the past is gone.
And they take that and that hurt that you've now experienced, that real loss. You feel like a failure. You carry that emotion with you. You don't say it to anybody because nobody wants to publicly say, "Hey, I'm a loser, baby." You kind of want to say, you put a brave face. And it's like this, and everybody got dumped, and the market caught everybody. But the harsh reality is nobody feels the pain, because when we start trading, money actually came about very hard. You had to work. You had a proof of work. You need to really do something to have the funds while we're trading. And for us now, it took us years. Money gets made easily, which it's an effortless almost enterprise that we're in. But that mindset does not happen overnight. And it's that division that takes time. And that's something that we want to train in you guys and show you how you can limit that. Because our relationship with the stop limit can define our perception of where we are in the market. Now, Lee, when we look at the strategy and you share your screen and we look at a buy setup, and on average, I've been looking at, it's like a 13-minute, 25-minute discussion of where we're going to buy. And I want the rest of you guys as well, and I'm going to put my eyes over to the comments. Who of you guys have experienced that? And let's test this. Let's see. If you've done it, you spent 15, 20 minutes, maybe even a day pulling over an entry, please just give me a 1. Just write there 1 in the comment section. And let's open up a little bit of a dialogue. So, and see if you guys feel exactly the same as we do. You spend all this time trying to get an entry. And then if you've done that, took about 15 seconds to kind of decide, where's the stop limit? That's kind of the thing, what we want to do. If you look at all these ones, there's a lot of them. I'm going to just bring them up. All of these guys, everybody here experienced this same feeling where you pulled over, days at an end, looking for an entry, and then seconds is spent on the stop limit. But for some reason, we ate the stop limit. And it's a weird thing, but that's just the general consensus. So we want to help you guys flip that dynamic, because that is, in the end of the day, where the big mistake is made. A strategy, and Lee, you've pretty said it, a strategy kind of determines where your stop limit's going to be. And maybe you want to elaborate a little bit on the strategy part of placing the stop limit before we go to the charts.
The strategy part, yes, because there's no one stop limit is gonna fit all of us. I compare this maybe again. I'm just gonna take this example of the shoes. When I walk in a shop and I want to buy a pair of shoes, there's different sizes, and for me, stop loss is the same. I would choose this one with a size of 41, and Rudo, maybe you're gonna go for 43, because that's gonna suit you better, and my 41 size shoes are gonna suit me better. So also depend really now in terms of what kind of trader again you are, and what strategy are you using. And what this strategy is going to tell you when you plan this trade, basically you would have taken action based on the plan. You think the price action is going to go up or down, you would have long in the market or buying the coin, or shorting, which is selling the market. And then based on your analysis, you need to know at what level my analysis is wrong, is not valid again. So this is how you plan basically at the beginning of trade. So that's why, according to this specific strategy, there is sometimes, a lot of time, must I say, a specific rule that gonna invalidate your strategy. And this is the level, the area where you should already put your stop loss. Okay, so that is the normal way of putting a stop loss for every single trader. But the problem is now, when you do that, as a professional trader, we know exactly where you put it. We know exactly what strategy you used and where is your stop loss. So we have to think one step ahead of them, and we have to try to hide it, to hide those stop loss. Does it make sense, Rodolfo?
Yes, it makes sense. So the thing is hiding it, meaning, so the first thing that comes to your mind, hiding it, is just moving it down. That's not the purpose of hiding your stop limit. You've all heard the smart ass saying when people say you first learn to lose and then you know how to win, and all these things. But the reality is that when we look at a strategy, a good strategy gives us an indication of where the loss is going to occur. We take action, and then from that point onwards, we know where to put our stop limit. Now, what do I mean by that? I want to dive into that deeper with you guys today. When we look at a buy setup, you've seen this a lot of time where we call buys, and you can go through our Twitter accounts. People say it's never going to go there. Yes, sometimes it doesn't, but it's never going to go there. You're wrong. It's going to go up. So people get stuck on that basis where, it has to happen. So when we put a stop limit out, the same idea is already, it was going to go up, and it should be going up, so the stop limit doesn't get a lot of thought, because nobody want to plan for losing. We want to plan for winning. So when we look at the stop limit and we start applying our stop limit, we first need to see where everybody else is stripping up. And around that level, when we get a good entry, that allows for a good stop limit. So a good entry gives a good stop limit, guys, and a bad entry makes for a stop limit that's just going to be smack in the middle and get hit every time. So when we say hiding our stop limit, it actually is getting the better entry where less people are participating, because then we can properly navigate our stop limits. Now, we can show you tricks, and these tricks can be applied somewhere else in the market. But if the market condition isn't conducive to buying in the correct emotional state, that stop limit trick that we're going to teach you, it's going to mean nothing, because you're going to apply it there, and that's the time it's going to get hit. So Lee, we touched on that, and we also touched on time frames, and very briefly, and I want you to maybe just dive into time frames a little bit before we start applying this to the chart as well. Stop limits on different time frames, because a lot of us mess up as well. I've got a job, I've got a function I need to go to, and I'm busy looking at a 1 hour candle set, and now I want to put a stop limit. But the trade plan was to hold this for 3 weeks.
Yeah.
What do I do?
Well said. That's why choosing the right time frame to trade is really important. That's why it's a really a delicate subject that we're talking here today. I mean, if I trade on a 5 minutes time frame, it means that I'm watching the chart like constantly. If I'm stopped out of the market within this 5 minutes time frame, I should already have maybe a plan B where I would take another trade just after that, or quickly after that. I should have another plan. But if you have a meeting, or if you're gonna work, you know that you're gonna work today from 8 a.m. to 6 p.m. And there's no way that you can manage your trade for the whole day. So there's no way that you're gonna look in a 5 minute time frame for a place to put your stop loss. So maybe you should look at 4 hour time frame or 8 hour time frame to have the stop loss. So for us to give you right now an idea, I mean, this is the stop loss for Bitcoin right now today. It's not gonna make sense for the most of you, because I'm not in your shoes. I don't know what size shoes you are wearing, what is the most comfortable for you. So it's gonna be really difficult for us to tell the community this is a stop loss for Bitcoin. So what you can do is, if I'm watching maybe a daily chart, this will be my stop loss. If I'm watching a 4-hour chart, this should be my stop loss. But it means that you should be able to react or to act after. If you get stopped out, you should be able to act straight away after that.
Yes. So, and then the last thing we want to put this in, and you guys really need to write this down. I used to have a board. I still have my books where I write stuff down. And the main thing is the stop limit is a promise. And in a negotiation,
I like that.
Yeah, it's a promise. And in a negotiation, if you're promising something, you are turning the odds. Do you think you're turning it to your benefit? And that's the main thing, you're turning it to your opponent's benefit. So when you place a stop limit, you're promising something. And that is normally where most people trip up because so little thought is paid to the stop limit and so much thought is paid to the entry. We all learn to get entries, but we don't know how to manage our money, and we end up giving away our game plan. Because if I know where your stop limit is, I kind of know where you bought, and I kind of know where you want to go with this trade. So it's easy for me to start using this against you. And that's what the professional market makers do. So we've got this tile here, and I think, Lee, now it's time maybe to move over to the charts. And I just want to bring up this one tile, and I want you guys just to see what it is. There's the slot machine, and there's the market maker. And he's just smiling because you're just hitting that stop limit, bringing that stop limit every day. And all that he's doing is just smiling because people tend to overlook these small little details. And then that is to their own dismay. And then the free get out of jail card, or what's the monopoly, you can pass, do not pass start, go straight to jail. That little scenario there. Oh, no. This trade is now an investment trade. I'm just going to hold it long term because now all stuff go wrong. You don't want to be wrong. So you just change the dynamic in the back end and you're bargaining with yourself. And that's even worse because now you're going to be bargaining on spot. It's fine. One Bitcoin is still one Bitcoin, irrespective of the price. But as soon as you're going to touch that juicy little leverage, that's going to come around and tell you, hey, you've been doing well. The market's bullish. Let's get in. One Bitcoin doesn't remain one Bitcoin if the market goes down. You are paying in for the losses, and that's where it really hurts you. So just remember that, guys. Okay, Lee, so let's crack in and let's maybe bring up that Bitcoin chart of yours and let's talk stop limits. So, buddy, what are we looking at?
The same chart that we're following for Bitcoin over the past week. I'm looking at my entry box got filled to the dollars. I did not put stop loss here, because I think we are not ready to give stop losses out because, like I said, I don't know how you guys trade. Okay, and to be honest with you, I'm not trading this time frame. I'm not trading this 8-hour time frame. This was just an example on how I would trade a chart. Whether it's 8 hours, 15 minutes, I will treat it the same way I'm treating this 8-hour chart. So that was only basically the Bitcoin chart. But what is interesting, like this is how I trade basically. I like to trade on a 15 minutes trade on a 15 minutes chart. So basically, even in that time frame, that box that they had for me, it was already too big because this is the way I trade, and that's my strategy and my style. And if I have to remove this box, now you can see what is the stop hunt. If that was the box, if you have taken any trade longs, maybe yesterday or 2 days ago, but even if you got this kind of drop, where would you put your stop loss if you take this one, this trade? So stop limit, damn it, sorry, stop limit. So you will put it here at those zones. I'm just gonna mark it on the chart for you guys. If you have taken a long here, maybe this is one of the stop limits. I'm gonna put the color red, and these are all the lows that we have, and maybe the last one here. Okay, so these are the three. If you take a long at that time, or the top of the range, if you want to already protect yourself, the stop limit is here. Along at that stage here, maybe at that stage here, your stop limit is here. And every time market maker comes back, stop you out, sweep the lows, and then even here sweep the lows, and then come back and goes up. And the last one, just before the show, just went back, swept the lows here. So everyone who put their stop loss at that level here will be stopped out, and the market just after that bounced and get a huge reaction, $2,000 candle. Okay. So why is it so profitable? Why the market makers are doing this? So I like the way that you said it was a promise to buy or a promise to sell, although the Bitcoin. So imagine within this 15 minutes time frame, if I had, I don't know, a big bag of BTC that I needed to, if I wanted to buy those a big bag of BTCs at, let's say, 59 or 60,000, it would be really difficult for me to tell everybody, guys, I want to buy BTC at 60,000, and people will not sell it to me. I will have to wait and wait and wait. But on the other hand, I know that there are promises to sell some BTCs at 58,616. Because if you put a long here, especially on those leverage platform, you put a stop limit here at 58,633. What does that mean technically? You are promising the market makers that I will sell my Bitcoin at 58.63. It's an open book. You are basically telling everyone, I'm ready to sell everything at that price. And I promise you I'm going to sell at a loss. I'm going to promise you I'm going to sell it at that price. So when I have this kind of information, I just need to push the market a little bit lower, knowing that if there is a 2,000 Bitcoin that have already a promise, a purchase for selling, a promise of selling this Bitcoin at that price, I just need to push the price lower here, and I just need to buy everything back at 58.2 or 58.6 even, and I will be sure with certainty that all the Bitcoin will be in my pocket, and then I can push the price higher. The same way works for the stop limits on the other side. So if you have shorted the market within this range, you could have put your stop limit here at higher here and at those kind of levels here. Okay, I'm just gonna highlight these three levels here. Between 61 and 61,600 on this smaller time frame. What does that mean? It means that if I'm shorting the market, I will promise you, the market maker, that I will buy BTCs at 61,000, 61,005, 61,006, even here a little bit higher, 62,003. So I've got already all those purchase orders already locked in. So if I have a bag of BTCs that I bought here at 58 and I want to sell it, I know exactly at what price I can sell it. I can sell a lot of this with those promises to buy it back for me at 61, 66, and 61.6 and 62 something. So basically, we are making this trade much easier for them to go for those stop zones. Right? So it does make sense like that, and it makes their games really, really easy. It's like playing a poker game with 4 or 5 of your cards open on the table.
Yeah, you wouldn't do that, but for some reason you're fine with it, doing it with trading.
Yeah.
And then you want to blame the market maker for doing you in. So I'm going to quickly grab screen. I just want to add something to this, if you don't mind, Haley. Okay, so same candles, same time frame, same everything. So I just want to show you guys exactly now how easy it is to trip you up. Because now we've got stop limits sitting in this range over here, all the way down there to the downside. And then we've got stop limits sitting in these areas over here to the upside. So everybody here is promising to sell their Bitcoin. And everybody here is promising to, to sell their Bitcoin. Yeah. And here they're promising to buy Bitcoin. Here they're buying it at a markup fee. And here they're selling it at a loss. Now, the market maker simply can do is he can calculate. And that's why it goes up and down. That's why the lateral pattern is born. Because what he does is he waits for the market to play out. And then he calculates, okay, I need to sell 200 Bitcoin to get the price down. And once I reach this level at the bottom, there will be 400 Bitcoin waiting for me at a discount to buy. So they do that, they buy the 400 Bitcoin at a discount. So they're happy. And while they do that, before they do that, they want to make sure that the 200 they're selling, they can take profit on by people willing to pay more for it. So what do? So they are selling 200 Bitcoin, selling to get the price down, then grab the buys when the stop limits hit. And then what do? They use more money to buy, because think about it, after a big stop limit gets hit, do you think everybody immediately just jumps back in the market? No. The order book gets thin. People jump out. I don't know what's happening. I maybe need to sit this one out. And what happens? Price starts jumping up, and they get to buy, to use these guaranteed buys to drive up the value of the Bitcoin that they lost in the original sale. So by the time price gets to this level over here, they've calculated that maybe here they've sold 200 Bitcoin at a $60,000 level average. They bought 400 at a $5,800, $58,000 average, and they managed to sell that again at 62. Which means if they can buy more and sell there where there's a lot of limit orders, they're going to saturate the market. And then what do? They get out and they wait for the thing to fall in on itself again. They wait for you to tell them what direction it's going to happen. So this is how they keep tripping you up, tricking you into it. So, and funny enough, you've seen this new candle open now, Lee, and it's always funny when it happens. Price kind of hovers in an area, and as soon as the new candle opens up, there's normally a direction. That's them taking action, waiting to see how high people were willing to buy, how high people were willing to take action on it. So I hope that this just helps you guys get a little bit of a background feel of how you should be looking at your stop limits. Let's maybe have a look at the comments. Let's see if you guys are if this changed your perception of the comments. So please just give me a 777 while we're looking in this casino theme in the chat. Everybody that's live, just give me a 777. We'll bring up your name and see if you guys are feeling exactly the same. And now that this has opened your eyes to why the stop limit is, for most people, their biggest undoing, frustratingly so. So right, guys. So with this being said, Lee, now we've given a lot of background theories, got a lot of people throwing 777s in here. I think now is the right time to actually show them how we go about looking at our stop limits and what do we want to see. And starting from the point that you need to have a strategy, because a stop limit means absolutely nothing if you just want to lick it like a stamp and stick it somewhere. You need to have a strategy. So, buddy, let's get back to your screen and let's maybe discuss strategy. And for a lot of you guys, we say strategy and people say, yeah, but this and this needs to happen and then I buy. But then tomorrow, a different strategy and then I buy again. A strategy is the one consistent within your trading. You don't get to change that every trade. You get to change it every 25 trades if it needs be. That's a strategy. And when a proven strategy gets applied, you know the amount of loss that you're going to take over 20 trades by looking at the way that you applied your stop limit. And then only you can decide to adjust your stop limit or the way you go about with your stop limit. So, Lee, looking at this area over here and looking at where we got this entry, just outline the limitations of your strategy and why you are willing to draw the line in the sand at a specific price point for us.
Okay, so basically here I've got different level of support, which is one is determined by this red line, and the second one is this dotted gray line. So that was my buy zone area. Okay, so at that stage, and I did add another fib extension from 1 to 3. So it's getting a little bit technical, but that's my strategy personally. So, and that's why my stop loss, if I have to take that trade, I will be hiding my stop loss just below this 123. But hold on, 123 here at 57.8, I see there's another candle here like this. So I tend to look in the past, what is the price action and what happened here already. So maybe I want to hide a little bit down my stop loss, and knowing that, well, just maybe at that level here, knowing that if I'm out here, I've got another buy limit order here sitting right below at 56. So I would trade this like this 8-hour chart like this if I had to put a stop loss, or I could choose to put a much bigger stop limit at the end of these two green box. I'm considering later in my position within this first box and the second box, and having a much lower stop limit. And then, because the target of that could be a much higher as well in terms of the profit, maybe 75. So the idea of these stop limits, I need to change my mind about these stop loss and stop limits, seriously. But stop limit, the idea is, first, I'm pretty confident, guys, with my entries. So I'm pretty sure that, almost every time, I do put a stop limit, but almost every time when I choose a box, I'm pretty sure that this kind of reaction coming. And the percentages of my stop limits, this is a really important tool that we need to use, is basically when you go on a long position, and this is another maybe subject that we need to dive in one of the days, is basically your risk to reward ratio. Having a stop loss of 5%, maybe it's a little bit too much for me. If I strict my risk at 2.5% loss every time, so instead of going full sized position on this, meaning that if I have $1,000, I want to go long on BTC within this area, and I only want to limit my risk at, let's say, 3%, then I will divide my position by 2 to make it less, to make it half. So if I lose 5%,
6%.
6%, if I lose 6% on $500, it is like I will lose 3% on $1,000. Okay, exactly. Okay, so the stop limit, I hear a lot of people saying, I put my stop limit at 3%, or I put my stop limit at 5%. I think I saw a comment like this as well just a few minutes ago. Okay, so there's no strict rules with that. You have to put your stop limit at 2%, 2.5%, or 5%. The percentages here is really not important. The area where you put your stop limit is important. It could have been a 10% stop limit here. Okay, as long as risk to reward ratio is good, is more than 2-to-1 ratio. If it is 10%, then just lower your size, lower your lot size. Instead of going $1,000 on this trade, then you have to cut maybe this position size by 4 and just trade with $250. It means that if you lose 10% on your $250, then you're gonna lose only $25 out of your entire $1,000. So risk management percentages is important by while choosing your stop limit at the same time. Okay, and Rudo, you are pretty good at hiding those stop loss when we said hiding those stop loss. So if you have chosen maybe to put a stop loss, which is the obvious part, as we see right now, maybe on the 8-hour chart, is this area here. I'm just gonna put the line here on the right one so you can see. And otherwise, there will be another one that I can see on this chart, maybe at that level here. So if you choose your stop loss, if you choose to put your stop loss at those two obvious areas, there's an indicator. It's called ATR, right, Rudo? ATR, average true range. So basically, this indicator at the bottom, this is telling you on that time frame what is the average size of one candle. Correct me if I'm wrong. I'm not using that indicator myself, but I know that it can be really helpful at the beginning to use that indicator. So this is the average true range of a candle from open to close within the trading range within the past time frame. And what this 1,891 means, that it means that the average move of one candle is about $1,000.
Let's round it up, $2,000.
$2,000.
Let's round it up because you need to give yourself a little wiggle room there.
Yeah. So if you give a little bit room of that, if your obvious stop limit area is this one here, then I will take this price and I will add another $2,000 on top and move my stop limit down by $2,000. So if I do that, that will be 573. So I will put my stop limit at 553, for example. And this is one of the strategies that you can use to hide your stop limits. Okay. Other strategies that you can use to put your stop limit is, for example, Elliott wave. Now, if you know the rules of Elliott wave, there are certain conditions that need to be certain conditions that is set in stone. Just going through quickly, in an impulse wave 4 cannot go below the top of the wave 1. So if you are trading and following the rules of Elliott wave to the teeth, then if you try the third wave, for example, then you can easily put your stop limit on top of the wave 1, because if you're in the third wave, or if you're in the fourth wave, then the fourth wave cannot go below the top of the wave 1. So it means that if the price action is coming back into the territory of the wave 1, it means that it's not an impulse wave and your analysis is wrong from the beginning. So you should be stopped out. You should be out of the market, because that price action will invalidate your original plan, your original strategy. And this is where you should put your stop loss.
So I see a few comments here, and the sad thing is, guys, with explaining a strategy can sometimes become lengthy and can become hard. I've got a simpler way of going about my stop limits, and maybe I'm going to share it quickly with you. But remember, Lee's an Elliott wave trader. So when he calls a 5-wave impulse and it says a 1, 2, 3, 4, 5, he knows the rules. And when Lee looks at a correction, he knows the rules. And that makes it easy for him to navigate within the framework of his strategy. Now, you guys are each going to trade with a different strategy. If you're working with moving averages, you're not going to put your stop limit on top of the moving average line, because it's kind of going to be where the price is going to want to go in any of the case, because that's the theory of the strategy you're using. You're going to want to use it below a different moving average line or further down. Or the easy way, and this is the nice thing that Lee shared with you guys, is to look at your average candle size. So I'm going to bring up my screen, and it's nice and clean, and I just want to show you guys a couple of tricks. So let me just take away all the stuff around it. So when I look at price like this, and the fun that I normally have, and you guys need to go do this for yourself, because it's really fun, you know, to just play and explore these things. So what I do is when I look at price action like this, and you know me, Lee, I hate trading on the 15-minute, but the 15-minute makes for good education when we start looking at different buy entries. I'm going to rewind all the way back to this area over here. Let's see, where's the rewind button? There's the line. Okay, so I'm going to rewind all the way down back to that area here. I'm going to make it nice and wide, and I just want to do applied stop limit for you guys, so you guys can see. Now, the first thing that I want to show you guys, we always say this, and I'm going to draw this out for you guys. We always say this. When do you trade? When you're making this. When you're making higher highs and higher lows. If you're not doing that, you're not interested in the market. Okay? So if I look at this area here and I look at that area there, do I see a higher high? Kind of whipped past it, but there's no closing above it. There's no confirmation. The price wants to go there. I don't trust the wick. Wick is sort of, in trading terms, if I'm negotiating with you guys and I'm saying I want to buy Bitcoin at $50,000. And you're saying, well, I'm not going to sell it at 50. I'll go as low as 55. But in essence, you actually want 60 and everybody else wants 60. That I thought, okay, I'll take 55 because I need to get the money in. That's a little quick. There's no general market agreement that's established price. So we're working on closing price. That's very important that you guys understand, because for that time frame, everybody agreed upon that was fair, open and closing price. Okay, so now I'm going to just hit the play button, and I'm going to go quick, but it's going to, because we're running out of time. So I'm going to go quick, but I want you guys to just bear with me. It's going to be quick, but you can always rewind and watch the video again. So at the moment now we are playing, candles are running through. So the first thing that I'm going to be doing is I'm literally just going to look at this area over here and say, okay, right, if that was a higher high, if we can get that higher high and get above it, that area is going to be the area where I'm going to want to try and buy. And the idea is, if I buy within this range over here, that I'm going to have to get my stop limit hidden somewhere. So if I look at the average candle size and the average price range that we have, at the moment there, we've got about a 1% in Bitcoin. And somewhere else it's getting a little bit narrower. There we're looking at maybe what's that range there, 0.5%. But let's speed this thing up a little bit more. Let's get a little bit more speed here. This thing is way too slow. Let's do a candle per second, rather than just pause it. That's going to be the zone that I'm going to want to look at. So if you now look at the average price, we just shared it with you guys. What was the average price? About a 1% within price. So if you look from this low there to where that low is, there's about 1.5%. So maybe you bought, maybe you had your stop limit, maybe there your stop limit got hit. But guess what? The market's going to do just that again. It's going to create a new scenario. Maybe the market wasn't finished with what it wants to do, but it's going to want to go back into that area over there. That's a demand zone, guys. That's kind of where price is going to want to go. So let's play that again. So now we're back in that range. We went back into that wick. Pause. There's your first opportunity to buy within that wick. What did we do? We went up, we went in the wick, and now we're making up a new high. Let's have another opportunity. Let's say, well, now that's the next zone. And I can use that as my next buy zone. And let's play that through. What do I not want to see now? If we're definitely going to be making higher highs, let's just zoom this out, make it smaller. There's a low. Now we're doing this. Right, what do I not want to see? I don't want to see a lower low. So simply put, now I can go and say to myself, right, if I want to buy and I want to protect this buy, where's my stop limit's going to be? It's going to be hidden below this range over here. And as we go around, now let's zoom into this area. And I can't speed up the buying process as quick as everything is moving now, but I'm going to try and do my best. So looking at this range there was a little bit of an imbalance in that range. There was a demand zone there, price quick to it. There's the wick. That wick now got tested. So there you've got another buy and another buy. But what do I have? I don't have a higher high. I cannot move my stop limit up. It still needs to be hiding over here, because we have not at this stage given ourselves an idea that the price wants to make a higher high. Remember, that's what we're looking for. I'm looking for this higher highs. So we're dabbling in buy zones all the time. So I can buy and buy. And the nice thing is what I'm seeing is every time this low is a little higher. So we keep on hitting these demand zones, creating more demand, creating more thing. And what do we have? Higher high. Great. Now at last, I'm comfortable. I can say, okay, right, we're creating a higher high. Let me just do this. Scrunch this down. We're creating a higher high. So where my stop limit was originally sitting here at the bottom, now I can start saying, okay, if this was the demand area that created this higher high, what should price not do? It should not fall below that, because then I know we're going to move down. So now I'm allowed to move my stop limit up into this range, make it a little tighter, use the average candle and say, right, if that's the area, 2%, 3% below that range. Now we wait and see. You can't be moving up every day. So now price keeps on going, and it might come back down and create a new area over here. We're going to do that same thing, because what do we have now? We've got a lateral range sitting right over there, kind of over there. we've got imbalance sitting over there. So a lot of people are going to put their eyes into buying it around this range over here. If price wants to go back and allow for that to happen. So what do we get? We've got imbalance sitting over there. So there's going to be a zone where price is going to want to move to. And all these guys are going to hide their stop limits right over there. So what do we want to do? We want to see how they're going to react. So let's see what price does. I don't remember if it's going to go down, but that's the main thing. If it goes up higher, what can I do? You can see this lateral range. Then I can go and get my stop limit and move it up higher. So it's still moving sideways, still moving sideways. Seems like it wants to creep up. See what it wants to do. Come on, come on, come on. Can't go any quicker. Does not want to go. Come on. I want to know if I can move my stop limit up. We're still trading in this lateral range. I can't do it until we get out of this range and start creating a higher high. So now we're kind of almost leaving this range. Let's see what it wants to do. Leaving the range. Okay, great. Now what I can do is we're leaving this range. So this area kind of becomes unrealistic for me now to want to be trading to this range, because there's the new trading range. Everybody that bought in this area here, their stop limits are going to be sitting down there. So I don't want to necessarily get my stop limits hit. As price is moving in that range there's a new imbalance forming over there. The price might want to move back into that range. And as soon as that gets tested and we make a higher high, I can then comfortably say, move my stop limit up again. So what are we doing now? We're making a higher high? Yes.
So where is the
now,
stop limit right now? Is it
so now with this, yes. So for now, because of this, I can now move my stop limit up and I can actually come bank this in. Because what do I want to see now? Because the way that price is moving and the way what the market is moving now all this hidden stop limits, the promises to buy and threaten my entry is out of the way. These guys are now in harm's way. This is locked in. Now price is going to move back. Let's see whether there's a demand zone over there and there's a demand zone over there. We kind of tested that one beautifully. Let's see if we get the bottom one. There we went to it, made a higher high. So most probably from this point onwards, we're going to try and track the momentum to the upside. So let's draw, and that's why I say sometimes it's tough when we have to make decisions this quick. But there's a trend line running over there. We're bouncing on it. We're making a higher high. Now we're killing these guys as stop limits. Let's see if we do that. Kind of hovering it around that level. Let's see if we kill their stop limits, because price is going to want to move into this area over here. See, price is going to want to go there. We broke trend. That's not a good thing. See, all these guys that's in here, they now literally got stopped out. That's an area where you can buy, because price is going to want to bounce there. And let's see what happens in the price. See, my stop limit's still safe. I can go to bed easily. All this crazy. There's a lot of people greed entering the market. There's a Dartmoor candle forming. All that crazy is out of the market. So in order for me to want to move my stop limit up, what do I want to see? I want to see us break this range and have everybody that traded over here in a new compromised area over there. And if I don't get that, that's where my stop limit is sitting at the bottom at the moment. I'm still keeping my stop limit there. And remember, this now, although it's explained on the 15-minute, is the trade intended for the daily. I hope it makes sense, guys. We can do a lot more of these rewind trades, and we can put in demand zones and buy strategies and actually run live trading, how we would trade stuff with you guys, so that we can show you how we go about it. But can you see that I always keep a buffer of trading between me and my stop limit, because I don't want this thing to get hit unnecessarily. Okay, the rest is history. We're kind of already in where we are now, so let's just take the time back. But as you can see, and let's just move over to a 4-hour. The squibble should be there still. If you look at all this price action, my stop limit's still nice and safe. And according to where I want to buy, and it's on its way, hopefully, I'm going to grab my buy over there, and that stop limit is going to still be safe, because at that stage, price is going to want to go to this imbalance, come back down, make a higher low, and then I know my stop limit is safe. And then start moving on, and then I can move stop limits up again should I want to. I hope it helps. I took a lot of time actually. Let's maybe.
Yes.
I tried to do it quick, guys. I hope I did. I hope I did
And
it justice.
you said my strategy is complicated. It took me a year and a half, almost 2 years to understand your strategy, but now I understand. I kind of enjoy it. Yeah. So basically, everyone, as you can see, everyone's got their own strategy, and there's no strategy better than the others. It's just every single trader is different, and you need to adopt and embrace what speaks to you and what makes sense to you, and trade your strategy, and stick to the rules. Never try to move your stop loss. Never try to delete or cancel your stop loss. One thing I would like to share with you guys as well is at the beginning, you always regret at the end of the day. When you cancel your stop loss, and then you can feel really you are in a drawdown, you are losing a lot of money, and then you are promising yourself, you are swearing to yourself, you know what, please, have you ever experienced that, maybe, for example, you cancel your trade, you go down in rate, and they say, I should have never done that. If I promise I'm never gonna do it again, and please give me back my money. So please give me back my money. Now you are like begging the market. You are not analyzing the market.
And it just keeps dumping.
There's a say that you said one day that really ring a bell to me. That speaks to me also. And when you said, when you don't have a stop limit, you are like against the wall. You can't act anymore. You are. How do you?
You don't have any opportunities. Basically, what happens if you remove your stop limit out of your strategy, you remove the possibility of taking the next opportunity.
So you have your back against the wall. You can't do nothing. But if you have a stop loss, it means that you are wrong. It's fine to be wrong. You are out of the market, but then you can take action again. You are active again instead of being passive.
That's it. Remember, the market never runs out of opportunities, guys. So what if we miss a few? We see a lot of people, they get angry because stuff went wrong or price cut. Don't hate. Self-educate, guys. Get yourself into a position where you can calmly look at these things and say, okay, right, but I understand that I've got no control over the market. I'm fine with it. I understand that no strategy is a guaranteed. It's all theoretical. And with all this, I understand that if I better myself, there's going to be new people joining soon, and they're going to be making my mistakes, and I will be the one capitalizing on them. It's cruel, I know, but that's why we're here. We want to try and help you guys set a few things right so that more people can grow and prosper in the crypto community. Lee, thank you, my love, with your beautiful shirt there. We're going to have to brand that with a little bit of Bitcoin or something in there. Guys, I think it's time to do just a little bit of admin. The video has gone way too long. I do apologize for that. I think Lee should have interrupted me, buddy. Okay, so guys,
I can't stop you. I always love listening to you.
Thanks, buddy. Okay, guys. So remember the 100 to 1 million strategy. We're going to be doing that with you guys. We're going to be trading it with you guys. We want to help you guys get to that area. So anybody and everybody that's part of the community will be able to do that on themselves. Teach a man to fish, guys, is the magic part here. We don't want to give you fish. We want to teach you to do it. Please make sure that you use the description at the bottom. All our social media links are there, guys. So don't get fish hooked or whatever the case, whatever the fancy term is. Don't get trapped by people promising and giving you guys outlandish trade setups, promising that they are us. These are the official links.
Yes, there is also like a scam comment on the YouTube channel. So please, guys, ignore this WhatsApp or whoever is asking you using our logo. Put in a comment asking you guys to contact him on WhatsApp.
Yeah,
that's not us. It's a scam. Please do not do it.
No, we common sense, guys. Common sense. We will not make promises that know us. We kind of straight level-headed people, and we're not here about making the 1,000,000% gains. It's about consistency. That's how the race was won, and we just want you guys to do that. And then lastly, guys, everybody that jumped onto the Discord, your early have you assigned the early supporter role? I think there's a couple of guys
Yes,
who've
yes,
already
yes.
done that.
We are still busy doing that. So it's yeah, a lot of demand,
So that's
a lot of people subscribing. So thank you guys, thank you for the support. And
yeah. Early supporters, guys, you're going to be getting a couple of more little advantages. I mean, while we're still finding our feet, we want to say thank you for you guys that's making this possible for us as well. Please, guys, hit the like button, hit the share button if the content is worth it. We do appreciate that. Lee, buddy, take it home for us.
what can I say more? I love you guys.
Please.
I love you, Rodo. I love the way you teach people. Yeah.
Thanks,
Everything's
guys.
written
Thanks,
here.
Lee. Lee's full of love today, guys. Thank you, my lovely.
You were on